I need to tell you something that's been keeping me up at night. And I'm not the only one losing sleep over this. 3 weeks ago, I was sitting in a conference room in London with some of the most connected people in the precious metals industry. These aren't YouTube personalities or newsletter writers. These are the people who actually move physical metal. The vault operators, the refinery executives, the guys who know exactly how much silver is where, and more importantly, how much isn't where it's supposed to be. And what they told me off the record made my blood run cold. But before I get to that, let me show you what's happening right now in the silver market that nobody's talking about. Because while everyone's distracted by Bitcoin hitting new highs and the stock market doing whatever the stock market does, something absolutely extraordinary is unfolding in the silver market. And most people won't realize what happened until it's already over. Let me start with a number that should terrify anyone who understands what it means. 950 million ounces. That's how much silver the COMEX vaults held at their peak in 2021. Today, we're sitting at around 270 million ounces. That's a 71% decline in registered silver available for delivery. In less than 4 years, over 680 million ounces have simply vanished from the exchange. Now, you might be thinking, okay, so some silver left the COMEX. So what? Here's what. That silver didn't just leave. It went somewhere. And where it went tells you everything you need to know about what's coming next. I spent the last month tracking down shipping manifests, import data, and refinery reports. And what I found was stunning. That silver went to India. It went to China. It went to the Middle East. It went to private vaults in Singapore and Switzerland. And here's the critical part. It's not coming back. This isn't silver that's sitting in some warehouse waiting to be sold when the price goes up. This is silver that's been removed from the Western financial system permanently. Let me paint you a picture of what this looks like on the ground. I spoke with a refinery operator in Switzerland last week. This is a facility that processes silver for some of the largest banks and institutions in the world. He told me something that should be front-page news but isn't. He said, "We're running 24/7 right now, and we still can't keep up with demand. And it's not retail demand. It's institutional. It's sovereign wealth funds. It's family offices. And they're not buying paper silver. They're taking physical delivery and moving it out of the country." Think about what that means. The smart money, the people with billions of dollars and access to information you and I will never see. They're converting their paper wealth into physical silver and moving it offshore. Why would they do that unless they knew something was coming? Now let me show you something even more disturbing. The silver market trades about 250 million ounces per day on paper. That's futures contracts, ETFs, unallocated accounts, all the paper derivatives that claim to represent silver but don't actually have the metal backing them. Meanwhile, global silver mine production is only about 850 million ounces per year. Do the math. The paper market trades more silver in 4 days than the entire world produces in a year. This is the definition of a fractional reserve system, and we all know how those end. They work perfectly fine until everyone wants their metal at the same time. Then the whole thing collapses in a matter of hours. And here's where it gets really interesting. Remember 2008? Remember when the financial system nearly collapsed because banks were over-leveraged and didn't have the assets they claimed to have? Well, we're looking at the exact same setup in the silver market right now, except this time it's not mortgages, it's physical metal. And unlike mortgages, you can't just print more silver. Let me tell you about what happened in March 2020. When COVID hit and the world went into lockdown, something extraordinary happened in the silver market. The price of physical silver and the price of paper silver completely disconnected. You could buy a silver futures contract for $12 an ounce, but if you wanted actual physical silver, you were paying $25 to $30 an ounce, if you could even find it. The premiums went through the roof because there simply wasn't enough physical metal to meet demand. Now, the COMEX and the bullion banks will tell you that was just a temporary disruption caused by refineries shutting down and logistics problems. But that's not what happened. What happened was a stress test, and the system failed. For a brief moment, the curtain was pulled back, and everyone could see that the emperor had no clothes. There wasn't enough silver to back all the paper claims. The authorities stepped in, changed the delivery rules, allowed London good delivery bars to be delivered instead of COMEX bars, basically did whatever they had to do to keep the system from imploding. And it worked. The crisis passed. The premiums came back down. Everyone forgot about it and moved on. Except the smart money didn't forget. They learned a very valuable lesson. When push comes to shove, paper silver is worthless. The only thing that matters is physical metal in your possession. And they've been acting on that lesson ever since. That's why 680 million ounces have left the COMEX. That's why refineries are running 24/7. That's why sovereign wealth funds are buying physical silver and moving it offshore. They know what's coming. Now, let me show you what's happening on the supply side, because this is where things get really scary. Global silver mine production peaked in 2016 at about 900 million ounces per year. Since then, it's been declining. We're now producing less silver than we were 8 years ago, despite the price being higher. Why? Because there are no new major silver mines coming online. The last major silver discovery was over a decade ago, and it takes 10 to 15 years to bring a new mine into production. Meanwhile, demand is exploding. Solar panels use silver. Electric vehicles use silver. 5G infrastructure uses silver. Every single trend that's supposed to define the next decade requires massive amounts of silver. The Silver Institute estimates that industrial demand alone will increase by 15% over the next 3 years. That's an additional 150 million ounces per year that needs to come from somewhere. But here's the problem. There is no somewhere. We're already running a supply deficit. The world is consuming more silver than it's producing, and that deficit is being filled by above-ground stockpiles. The same stockpiles that have been declining for the past 4 years. The same stockpiles that are now sitting at multi-decade lows. Let me put this in perspective. In 1980, there were an estimated 3 billion ounces of above-ground silver available for investment. Today, that number is probably closer to 1 billion ounces, and declining fast. We've consumed 2/3 of the world's available silver in 40 years. And unlike gold, which gets recycled and stays in the system, most silver gets consumed in industrial applications and is gone forever. It's economically unfeasible to recover silver from a solar panel or a circuit board. So we have declining supply, exploding demand, and vanishing stockpiles. And on top of all that, we have a paper market that's leveraged 250 to 1. This is not a sustainable situation. Something has to give. Now, I know what some of you are thinking. If this is such a sure thing, why isn't the price going through the roof right now? Great question. And the answer is manipulation. I know that sounds like a conspiracy theory, but it's not. It's documented fact. In 2020, JP Morgan was fined $920 million for manipulating the precious metals markets. That's not speculation. That's a legal settlement. They admitted to spoofing the market, placing fake orders to drive prices down for nearly a decade. And here's the thing. That fine was for past behavior. It doesn't mean the manipulation stopped. It just means they got caught and had to pay a penalty. The same banks that were manipulating the market then are still the largest players in the market today. They're still the ones holding massive short positions. They're still the ones with every incentive to keep the price suppressed. But here's what they can't manipulate: physical supply and demand. They can push the paper price around all they want, but they can't create silver out of thin air. And eventually, the physical market overwhelms the paper market. We saw it in 2020. We're going to see it again. Except this time, it's going to be much bigger. Let me tell you about what's happening in China right now, because this is the canary in the coal mine. China is the world's largest producer of silver, mining about 120 million ounces per year. But they're also the world's largest consumer, using about 200 million ounces per year. That means they have to import 80 million ounces annually just to meet domestic demand. Except they're not importing 80 million ounces. They're importing 150 million ounces. Where's that extra silver going? It's going into strategic reserves. The Chinese government is stockpiling silver. They're not doing this because they think it's a good investment. They're doing this because they know what's coming. They're preparing for a world where the dollar is no longer the reserve currency, where physical commodities matter more than paper assets. And they're not alone. Russia has been accumulating silver. India has been accumulating silver. The Middle Eastern sovereign wealth funds have been accumulating silver. Every major power that's not aligned with the Western financial system is loading up on physical precious metals. Now, you might be wondering what this has to do with you. Let me make it very personal. If you have retirement savings, if you have a 401k or an IRA, if you have money in the stock market or bonds, you need to understand that all of that wealth is denominated in dollars. And the dollar is a piece of paper backed by nothing but faith in the US government. Quick aside here because this is important. If you're sitting on $100,000 or more in retirement accounts, I put together a free guide on how gold IRAs work. It's in the description below. It covers how to get physical precious metals into your retirement account without tax penalties, how the process works, what the costs are, all of that. Worth checking out if protecting your retirement savings is something you're thinking about. Anyway, back to what's happening in the silver market. Because here's where this gets really critical for anyone trying to preserve their wealth. The dollar has lost 98% of its purchasing power since 1913. That's not my opinion. That's math. What cost $1 in 1913 costs $31 today, and the pace of that decline is accelerating. We printed more dollars in 2020 and 2021 than existed in the entire money supply before 2008. Think about that. We doubled the money supply in 2 years, and now we're shocked that inflation is out of control. But here's what most people don't understand. Inflation isn't prices going up. Inflation is the value of your money going down. When you see the price of groceries increasing, that's not the groceries becoming more valuable. That's your dollars becoming less valuable. And the only way to protect yourself from that is to own assets that can't be printed. Assets like silver. Now, let me show you what happened the last time we had a situation like this. In the 1970s, we had similar conditions. Massive government spending, rising inflation, loss of confidence in the dollar. In 1971, Nixon took the dollar off the gold standard. That was the moment when the dollar became pure fiat currency, backed by nothing but government promises. What happened next? Gold went from $35 an ounce to $850 an ounce. That's a 24x increase in 9 years. Silver went from $1.50 an ounce to $50 an ounce. That's a 33x increase. And this wasn't because gold and silver became more valuable. It was because the dollar became less valuable. The metals simply maintained their purchasing power while paper currency collapsed. And here's the critical point. We're in a worse situation now than we were in the 1970s. The debt is higher. The money printing is more extreme. The loss of confidence in the dollar is more widespread. And this time, we don't have the option of raising interest rates to 20% like Paul Volcker did in 1980, because the debt is so massive that we can't afford the interest payments. We're trapped. And the only way out is inflation. They're going to inflate away the debt, which means they're going to inflate away your savings. Unless you're holding assets that can't be inflated away. Let me tell you a story that illustrates this perfectly. I have a friend who's a financial advisor. Very successful guy, manages hundreds of millions of dollars for high net worth clients. About 2 years ago, he started getting calls from his clients asking about precious metals. Not just 1 or 2 clients, dozens of them. These are people with $10 million, $50 million, $100 million portfolios. People who have access to the best information and the best advisors money can buy. And they were all asking the same question. How do I get physical gold and silver into my portfolio? Not ETFs, not mining stocks, physical metal. And they wanted it stored outside the banking system, in private vaults in jurisdictions that aren't subject to US government control. My friend told me something that stuck with me. He said, "These people don't need more money. They have more money than they could spend in 10 lifetimes. What they're worried about is keeping what they have. They're not trying to get rich. They're trying to not get poor." And that's what this is really about. The silver market reaching a breaking point isn't just an investment opportunity. It's a warning sign. It's telling you that the people who understand how the financial system really works are preparing for something big. They're moving their wealth out of paper assets and into physical assets. They're diversifying out of dollars and into hard money. Now let me show you what the technical picture looks like, because this is where things get really interesting. Silver has been in a consolidation pattern for the past 3 years, trading between $22 and $26 an ounce. That's a very tight range for a commodity as volatile as silver. And tight consolidation patterns like this typically precede major breakouts. If you look at the chart, we're sitting right at the top of that range right now. We've tested $26 multiple times over the past few months and haven't been able to break through. But each time we test it, the base gets stronger. The selling pressure gets weaker. and the next test is usually the one that breaks through. And when silver breaks out of a multi-year consolidation pattern, it doesn't just drift higher, it explodes. We saw this in 2010-2011, when silver went from $18 to $50 in less than a year. We saw it in 2020, when silver went from $12 to $30 in 4 months. These aren't gradual moves, these are parabolic runs that happen so fast that most people miss them. And here's why I think we're on the verge of another one. The fundamentals have never been better. The supply deficit is larger than it's ever been. The stockpiles are lower than they've been in decades. Industrial demand is at all-time highs and growing. Investment demand is starting to pick up, and the paper market is more leveraged than ever. All we need is a catalyst, and there are plenty of potential catalysts on the horizon. A banking crisis, a currency crisis, a geopolitical event, a major default in the derivatives market. Any one of these things could trigger a rush into physical silver that overwhelms the system. And when that happens, the price is going to do things that seem impossible right now. I'm not talking about silver going to $35 or $40. I'm talking about silver going to $100, $200, maybe higher. Because when a fractionally reserved system breaks, the price doesn't just go up. It goes parabolic as everyone tries to get their hands on physical metal at the same time. Let me give you a historical parallel that might help you understand what this could look like. In 1980, the Hunt brothers tried to corner the silver market. They accumulated over 100 million ounces of physical silver and drove the price from $6 to $50 in a matter of months. Now, they ultimately failed because the COMEX changed the rules mid-game and forced them to liquidate. But here's the important part. They did it with 100 million ounces. Today, we have multiple sovereign nations, sovereign wealth funds, and institutional investors accumulating silver. We're not talking about 100 million ounces. We're talking about billions of dollars flowing into physical silver from entities that have unlimited resources and no intention of selling. And unlike the Hunt brothers, these buyers aren't trying to corner the market. They're just trying to protect their wealth. But the effect is the same. They're removing physical supply from the market permanently. And here's the thing that keeps me up at night. What happens when the general public figures this out? Right now, precious metals ownership in the US is less than 2% of investment portfolios. That's nothing. In the 1970s, it was over 20%. If we just get back to historical norms, that's a 10x increase in demand. And there's no way the market can handle that kind of demand with current supply levels. Imagine what happens when pension funds start allocating even 1% of their portfolios to physical silver. Imagine what happens when retail investors start pulling money out of overvalued stocks and putting it into undervalued commodities. Imagine what happens when the next financial crisis hits and people lose faith in the banking system. The silver market is tiny. The entire above-ground investment supply is worth maybe $30 billion. That's less than the market cap of many individual tech stocks. It would take a fraction of the money sitting in overvalued equities to completely overwhelm the silver market. And when that money starts moving, it's going to move fast. Now, I want to be clear about something. I'm not telling you this to scare you. I'm telling you this because I think you deserve to know what's happening. The mainstream financial media isn't going to tell you this. They're too busy talking about the latest meme stock or whatever the Fed said in their last press conference. They're not paying attention to the structural problems in the commodity markets. They're not tracking the flow of physical metal. They're not talking to the people who actually move this stuff around. But I am. And what I'm seeing is a market that's on the verge of a historic breakout. A market where the fundamentals are screaming that something big is about to happen. A market where the smart money is positioning for a major move higher. And here's the beautiful thing about silver. You don't need to be a billionaire to participate. You can buy physical silver for $30 an ounce right now. You can protect your wealth with an asset that's been money for 5,000 years. You can position yourself for what's coming without taking on massive risk. But you need to act now. Because once this breaks, once the price starts moving, it's going to be too late. The premiums are going to explode. The wait times are going to extend to months. The dealers are going to run out of inventory. We saw this in 2020. We're going to see it again, except this time it's going to be worse because the supply situation is more dire. Let me tell you what I'm doing personally. I'm buying physical silver every single month. I don't care what the price is. I don't care if it goes down next week or next month. because I understand that this isn't about trading. This isn't about trying to time the market perfectly. This is about accumulating a hard asset that's going to protect my wealth when the paper system fails. And I'm not alone. I talk to people in this industry every day. Dealers, refiners, vault operators, institutional buyers. And they're all saying the same thing. The demand for physical silver is unlike anything they've ever seen. It's not retail demand driven by hype. It's quiet, steady, institutional accumulation. The kind of buying that doesn't make headlines, but moves markets. One dealer told me last week that he's seeing orders from family offices that are buying $5 million, $10 million, $20 million worth of physical silver and having it shipped to private vaults overseas. These aren't speculators. These are people who are moving generational wealth out of the financial system and into hard assets. And they're doing it quietly, without fanfare, because they don't want to drive the price up before they're finished accumulating. That should tell you everything you need to know about where this is headed. Now, I want to address something that I know some of you are thinking. What if you're wrong? What if the price doesn't go up? What if I buy silver and it just sits there? Fair question. Let me answer it this way. What's your alternative? Keep all your wealth in dollars that are being devalued by 7% per year? Keep it in stocks that are trading at valuations that have only been seen twice in history, right before major crashes? Keep it in bonds that are paying negative real yields after inflation? The way I see it, owning physical silver is the lowest risk position you can take right now. If I'm wrong and nothing happens, you own an asset that's been money for 5,000 years and has never gone to zero. If I'm right and the silver market breaks, you're positioned for potentially life-changing gains. That's an asymmetric bet. The downside is limited. The upside is enormous. And here's something else to consider. Silver is the most undervalued asset in the world right now, relative to its historical relationship with other assets. The gold-to-silver ratio is currently around 85-1. That means it takes 85 ounces of silver to buy 1 ounce of gold. The historical average is 15-1. If silver just reverts to its historical relationship with gold, that's a 5x move from current levels. And that's not even accounting for a bull market in precious metals. That's just silver catching up to where it should be. Think about that. Silver could quintuple in price just by returning to its normal relationship with gold. And we haven't even talked about what happens if we get a real bull market in precious metals like we had in the 1970s or 2010-2011. The setup is perfect. The fundamentals are screaming. The technical picture is coiling. The smart money is accumulating. All the pieces are in place. The only question is, are you going to act on this information? Or are you going to wait until everyone else figures it out and the opportunity is gone? Because here's the thing about markets. They don't wait for you to be ready. They don't give you a warning when they're about to move. By the time it's obvious to everyone that silver is going higher, it's already gone higher. The people who make money in markets are the ones who act on information before it becomes common knowledge. Right now, you have information that most people don't have. You understand what's happening in the silver market. You understand why the smart money is accumulating physical metal. You understand why the supply situation is critical. You understand why this is different from every other time someone has predicted a silver shortage. The question is, what are you going to do with that information? I can't tell you what to do. I'm not a financial advisor. I can't give you personalized investment advice. But I can tell you what I'm doing. I'm buying physical silver. I'm storing it outside the banking system. And I'm preparing for a world where paper assets are worth a lot less than they are today. Because the silver market is reaching a breaking point, and when it breaks, everything changes.